Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. Okay, wow, what a great quarter. Congratulations everyone at Tesla and Elon. We had auto revenue break $10 billion for the first time ever at $10.206 billion. Okay, for those of you who watched my predictions on revenue, you saw how much effort I put into estimating the revenue. Well, that effort paid off because my guess was $10.126 billion, only $80 million off, or actually under 1%. After auto revenue, it's more guesswork and there is more potential margin of error, but I did say that method I used always seems to be the most accurate. We also had record profit margins, like I expected too. I had 29.3% and it was 28.4%. This is Tesla's highest ever profit margin. Like I said, it was going to be due to the extra Model Y ramping, as that car has significantly higher profits. But although this is a high margin, bear in mind that the tax credits are much lower this quarter too, at only $354 million. So I think I was right, and it would appear that Stellantis are no longer contributing to tax credits. I had my energy and services figure lower than what they had produced. Like I said, these revenues basically are impossible to guess, but due to them being slightly higher, we nearly had $12 billion total revenue. Now, some of you saw I posted on Twitter and pinned the link in my estimates video. I'd accidentally included Bitcoin in twice, as I added it into OPEX as well as on its own. But here was my updated score sheet. It also turns out my Bitcoin estimate was way off, and it was only a $23 million impairment. I had $124 million. Tesla's OPEX was slightly lower than I thought as well, but this resulted in an income from operations of $1.3 billion. This is over twice last quarter. I had them at $1.23 billion, which was very close, given how difficult a figure that is to estimate. But then Tesla had much lower tax and interest than I predicted, meaning that they generated a $1.14 billion GAAP earnings profit, an absolute record. And that's despite the Bitcoin hit too. Well, that's a lot more than regulatory credits, so no longer do Tesla only make profits from regulatory credits. This came to an EPS of $1.02, up almost 3 times from the previous quarter that was just 39 cents. I've compared my estimates with the actual numbers that you can see here. It took me a couple of days to compile all this, so I do feel somewhat invested and like to see how close I get. I was getting quite tired by the end of it, and it might have been why I accidentally included Bitcoin in twice, as the Bitcoin loss was new to the financials. This is a 98% increase in revenue year over year. That's astounding. But when you think about how we're also missing the S and X lines, then it's even more impressive. Tesla say that resulted in a 2% lower ASP, average selling price, yet their margins are up significantly, which tells you despite the cars costing less, the margins are even higher. Again, this is what I've been saying about how profitable the Model Y is. When we look at factory capacities, we still see no update for the new factories, but Tesla have changed Shanghai to above 450,000, which makes sense as they have been exceeding their Model 3 capacity, and I expect them to also exceed Model Y. Tesla said that they did experience minor interruptions in Shanghai due to supply chain issues and factory upgrades. We might assume this is why some of the numbers were lower than we expected this quarter. Tesla say they have validated performance and lifetime of the 4680 batteries at Cato Road and nearing the end of manufacturing validation, which is sounding promising. The energy business is increasing too, but still nothing major or exciting. I can't see this business doing much until 4680s are scaled. Tesla's outlook is still on target for 50% average annual growth in vehicle deliveries, and expect operating margin to grow over time. Like I say, 30% margin is not far away, as unbelievable as some of you think. And when Model Y with 4680s are scaled, those cars will be well in excess of 30% margin. Tesla believes that they are on track to build their first Model Y vehicles at Austin and Berlin this year. Semi-truck is delayed until 2022, but not overly surprising. Cybertruck is also mentioned, but Tesla is saying it will be produced after Model Y, so I think likely not until next year. We get to see what the new revolutionary Berlin paint factory looks like. It will be great to see what it looks like in use. We get to see a photo of the progress Tesla have made with the Texas Gigafactory over just 6 months, which is insane, particularly as Elon says this building is 1 mile long. We're also shown the stamping presses and even the Model Y body shop. All of this looks so promising. It's actually going to happen. Tesla are going to break through with their battery manufacturing and vehicle production. Okay, all very positive. The results didn't seem to affect the stock price overly, but it's definitely beaten expectations, and we're up 1% after hours. I actually thought it might have done more than that, but nothing like $700 like some people were speculating. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.